Enlightened investors, I have some exciting news for those looking to dive into the world of passive real estate investing. Many have asked how I got my start in commercial real estate investing. Well, it all began with an event close to my heart. Multifamily Live is back, and this time it's online. This event holds a special place for me because it's where I got my start in commercial real estate investing. Imagine a virtual gathering where you can gain invaluable insights into how cash flow ready apartment buildings are the key to your passive income journey. Take the mystery out of passive real estate investing and step into the active side of the equation to gain a comprehensive understanding so you can invest passively with confidence. Whether you're a newbie or a seasoned investor, Multifamily Live is designed to cover everything from acquisition to asset management. You can be confident that you'll leave this event with a comprehensive understanding of commercial investing. Mark your calendars for May 9th to May 11th. Trust me, this is an event you won't want to miss. Ready to enhance those passive streams of income? Get your ticket now, and together, let's take the next step to enhance our financial well-being, to live abundantly and flourish in all areas of life. I'll see you in Multifamily Live. Hello, enlightened investors. Welcome back to Real Estate Investing Abundance. I'm your host, Dr. Allen, and what a delight it is to have you back with us today. Boy, do we have a fantastic program for you today. And I know it's going to be great because Dave Zook has been with us before and he wowed us the first time, which was about 3 years ago. So I'm glad he finally found his way back with us. Well, Dave Zook is the founder of the Real Asset Investor, and he emerged from successful business ventures burdened by hefty tax liabilities. Intrigued by legal tax reduction strategies, he immersed himself in tax code intricacies, assembling a team of experts. Through strategic investments in tax-friendly asset classes, he mitigated taxes and secured robust returns, mastering the realm of tax strategy and investment. Born from his expertise, the Real Asset Investor empowers others through education and tailored investment opportunities, championing proactive planning and collaboration. As a savvy entrepreneur, syndicator, and investment strategist, Dave navigates diverse asset classes like ATMs, car washes, self-storage, and ranking among the nation's top ATM fund operators. An early Bitcoin investor and advisor to high-performing funds, Dave shares his insights, widely featured in prestigious events and media outlets nationwide. So welcome back, Dave. So glad to have you with us. So fill us in. It's been 3 years. What's been going on with you for the last 3 years?
Well, first, Alan, thanks for having me back. It didn't seem like 3 years. Good question. Over the last 3 years, about 3 years ago is when I got into the about 3 or 4 years ago is when I got into the car wash space, and so we've been building a lot of car washes since we last talked. You mentioned ATMs and self-storage. We're still doing lots of that. We've also got a natural gas fund. And we, I'm a heavy investor personally in natural gas, and I like the fundamentals of natural gas, but we've been building a lot of car washes. So over the last couple of years, we bought, I think it's 8 existing car washes that were built and, fully operational. We've built a bunch of car washes since then and got them through the grand opening phase, and we're now washing cars, a lot more cars than we were even 6 months ago. And we've got 19 more that are in some form of construction right now. So we got 19 active construction sites going on right now. So we're hoping to be, somewhere around 30 car washes by the end of the year,
Wow.
which will make us the largest Tommy's Express car wash franchisee in the country. So lots going on around here. Man, a lot has happened in the last 3 years, but especially as we got into the car wash space and been doing a lot of that, it's kind of ramped up. So exciting times. It's an exciting asset class to be a part of, and we got a great team, and I'm excited about it.
Well, to say the least, that is extraordinarily impressive. 19 construction sites all at one time. And I don't know a whole lot about car washes, but I know that there are huge regulations that are imposed, and that as a builder of those car washes, you have to jump through a lot of hoops. So your company's been busy for sure. Well, I'd like to talk more about those things, but before we go into that, one of the reasons you jumped investment sectors here was because of taxes. So just take us through a little bit of history on that in conjunction to what were you previously investing in, and why was that such a high tax liability situation, and why has changing reduced that tax liability?
Yeah, so a couple things there. I mean, one, if you just go out, and I tell my boys this all the time, if you just go out and you're just making a living and your sole focus in business is to create income, and you're not paying attention to tax, you're going to get taxed like a slave. I mean, it's you'll become a slave of the system.
Mm-hmm.
And so I was taught from the time I was a kid that, if you make a lot of money, you got to pay a lot of tax, right?
Mm-hmm.
And so that's conventional wisdom. You make a lot of money, you got to pay a lot of tax. And so I really got myself in a position, and this was through building several successful businesses. I got myself in a position where I'm paying $500,000 a year in tax.
Mm-hmm.
And I got tired of it. And it was one thing when I was out there hustling and just really working hard. It didn't feel like hard work because I loved it. I loved business. I loved, it really didn't feel like work because I was doing what I loved to do. But there is a trade-off. I mean, you talk about the blood, sweat, the tears, the problems, the hours, I was working from, dark to dark, and oftentimes way into dark. And again, I was doing what I loved doing. But when you have to give half of the fruits of your labor back to the government, it takes some of the fun out of it.
Mm-hmm.
And so I started studying and I started reading a lot, and I was hearing Robert Kiyosaki talking about how you can make millions of dollars a year and pay no tax legally. And I had to find out what that was about. So I got around those guys. I got around Robert. I got around, other successful people and started asking lots of questions. And I realized that they were using depreciation and real estate to offset their tax liability. And of course, me being focused on just growing my businesses, and some of the businesses were, really just sales and marketing, and very successful sales and marketing. I mean, we had sales going on all over the country, and it was internet marketing. But one of those businesses in particular was, I had like three employees and a couple of computers and a server, and that was it. And we were making millions of dollars a year, and I didn't need trucks and equipment and the stuff that gives you the write-offs to protect you from the tax. I didn't need any of that. And so, and of course, I was doing some other stuff. I was doing hard money lending, and I was doing a couple property flips, and really, making a lot of money, but I was a tax slave. And
Mm-hmm.
so when I realized that, for the first time in my life, I remember I was sitting in a class by Tom Wheelwright, and he's a CPA who wrote the book Tax Free Wealth. And he's going down through and talking about all the different ways you can stay tax efficient. He said, if you want to change your tax, you got to change your facts. Meaning, if you want to change your facts or your tax, you got to change the way you're doing life. You got to change the way you invest. You got to change the way you do business. And so I followed his advice, and I got around some really smart people and figured out that they were using depreciation from real estate and all that. And I started doing business differently. I started, I'm still making a lot of money from my businesses, but I started doing some other, I started being really strategic from a tax perspective. And I remember, the one year paying $500,000 a year, the next year paying zero. And it was really just because of the way I started investing and doing business. And that was while my income was growing. I went from paying $500,000 to paying zero. And it's been close to zero ever since. I mean, it's been, low single digits or zero
Mhm.
ever since. And so it's just been a kind of a process. I was a student, still am. And, I study this stuff. When there's a new bill comes out, like the CARES Act or like the Inflation Reduction Act, I get with my CPA and say, okay, what is this? What's in this? I know it's like 400 pages, but can you give me like a 2-page summary? What's the opportunity in here? And most of those bills are toxic. I mean, they're not good for us, but there's stuff in there that you can use and really to play this game, all you got to do is know the rules. Once you know the rules, now you can become strategic. If you're just out there doing business and you're just running around making money and you're not paying attention to the rules, it's like a football team that's just trying to score and pays no attention to anything else. Well, you also need defense, right? So yeah, it was a life. I mean, I'm a student, and I help people, 6, 7, 8, even 9-figure liquidity events. I help people work through their complex tax situations, and sometimes, if it's a situation where I don't have all the answers, I'll get my team in there with me, and we'll get in there and we'll kind of work through this together. And of course, that's how I've learned over the years. And of course, they've gotten a lot bigger over the last 5, 6, 8 years, but it's been a lot of fun.
Well, today we are visiting with the fabulous Dave Zook, and you can find Dave at therealassetinvestor.com. That is therealassetinvestor.com. And Dave, you have lots of wisdom to share with us, and I certainly appreciate your insights on taxes. I didn't do a whole lot of investigation. I just fell into real estate investing kind of accidentally, and I was just blown away the first year that I had a rental property, and I was working a W-2 job, and like you said, income is taxed to the yin yang, whether it's a W-2 or it's a business income, it's taxed to the max there. And so I was used to paying taxes through my W-2 job, and then suddenly I had a rental property, and my tax liabilities, at least income tax liabilities, dropped to nothing, and it's been that way ever since. So yes, wonderful. So I can understand how the car wash and the self storage and even possibly the ATMs are working for depreciation. But you also said that you're invested in natural gas funds. How is that working as a tax strategy?
So every asset class that I offer to my investors is just simply a reflection of my own portfolio. And so when I look at natural gas, I mean, we never lead with tax. Like, I
Mhm.
need depreciation, I need paper losses. I don't lead with that. I got to like the asset class first.
Mhm.
If I really like the asset class, then we look at the tax, what kind of tax impact we can get from it. So when you look at the different asset classes, you'll see, when you look at the 4 core asset classes that we offer, you'll see each one of them is kind of uniquely different.
Mhm.
And some of them are, longer term equity appreciation plays. Some of them are quicker cash flow with, little or no appreciation in the back end. And then, natural gas is, you mentioned, ordinary income or W-2 income. I've still got ordinary income. I need to protect myself from the tax on my ordinary income. How do you do that? Well, investing in natural gas or oil is one of those things. It's actually one of the few things you can do to offset the tax liability on your W-2 income. And so that's a vehicle, an investment vehicle that I use for myself to protect myself from the tax liability from ordinary income. So every, and like I said, it's one of the few asset classes. If you got passive income, as you know, if you got passive income from real estate, there's all kinds of options to protect yourself. It's one of the easiest ways to protect yourself from the tax liability on that income. But W-2 or ordinary income is much different. There's only a few things you can do there. So it's really just a kind of a tool in my tool bag. I like the asset class. I feel like it's got upside. I feel like it's got a lot of upside based on the fundamentals, based on what I'm seeing. So I feel like it's got a lot of upside, but then it's also a tax tool. I can get 70 to 80% write-off in the first year against my ordinary income. So it's interesting from an income perspective, but it's also interesting from a tax perspective, because when you do this kind of thing strategically, you can make a big dent in your tax liability, and it just it changes. I mean, like you said, once you get to the point where you know this stuff and you become tax efficient or tax free, you never want to go back.
Right. Absolutely. So what is it in natural gas funds that you're writing off as depreciation?
So it's a little bit different than depreciation. It's called IDCs, intangible drilling costs. You have intangible drilling costs when you drill a well. So and here's kind of the cool part. It's not subject to the same rules as bonus depreciation. So 2 years ago when we had 100% bonus depreciation, and then last year we had 80% bonus depreciation. This year we got 60% bonus depreciation. It keeps going down and set to sunset, over the next couple of years. And so this is different. IDCs, you get 70 to 80% write-off in the first year.
First year.
And there's more. You get an additional, you get the rest of that in year two. And then even your production, if you pull $100 worth of production out of the ground, you get $100 of income from that gas that you're selling. You only get taxed on 85 cents, or on 85%. So if you pull out $100 in gains or in cash, you got to pay tax on $85. So you get a 15% depletion allowance, from all of your production. So it's a tax-friendly investment. I will tell you, I've invested with a number of different groups. Today, there's only one. I invest with a group out of Western PA. It's a fourth generation family now that's been doing this all their life, and I've invested personally with them for the last 6 years. We've had funds with them in the last 3, and so don't just go out and buy oil and gas. This is a slippery business. Do your research, do your due diligence, and make sure that you're doing it with the right group.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. I think that's probably good advice with any sector, whether it's
absolutely
car washes, multifamily, or self-storage, whatever. Know the team that you're putting
for sure
with. Yeah.
Well, and that's what it is. You're not. It's not just an asset class. It's a business. It's an operating business. And if you can get with the right people, if you get good people behind that business, I mean, that is the number one ingredient to success. Once you find the asset class that works for you and that you're bullish about, at that point, now it becomes all about operations. If you can find the right team, if you can find the right people to do it with, number one, your chances of success goes way up. Your chance that you're actually going to enjoy it and have fun with it goes way up. You got to do it with the right people.
For sure. And today, enlightened investors, we are talking to the right person, Dave Zook. He has multiple years of experience in multiple business and has had tremendous success in real estate and natural gas. And we'll talk more about the assets he is working with here in just a moment. But you can find Dave at therealassetininvestor.com. Well, Dave, let's talk a little bit about car washes. I've heard a lot of hype in conjunction with car washes in the last year. One thing that people like about car wash is that has high returns, but it also has some pretty immediate returns. Is that correct? Or
It depends. So if you buy an existing car wash, number one, so it is a high margin business. It's one of the highest margin businesses I'm involved in. It's a cash flow business. If you buy right and you buy an operating car wash, for sure, it's you can start making money quickly. I will tell you that, car wash development, like any development, it takes some time. It takes some time to get those car washes. Number one, you buy the lot, you get it entitled, you start putting shovels in the ground, you go through development, you build it, you have your grand opening, and then it takes a little while to get it stabilized. And so it's just, it is development. So here's a trade-off. We bought some existing car washes that were operational. And a good stabilized car wash, we've paid almost $11 million for a good stabilized car
wow.
wash. I mean, at that point, you were paying for, some goodwill, the business,
Mm-hmm.
the income, but we needed that car wash because we wanted that area. We wanted to
Mm-hmm.
build out that area. So in order to protect an area, you gotta build out that area. And that just happened to be in San Antonio. And so we bought that car wash. Now here's the trade-off. We started making money quickly because it's already an operating business. That's why we paid the margin to get to buy that business. Now we can build that same car wash for $8 million.
Mm-hmm.
The problem is, it's a lot more work. It takes a little more time. But when you do that, you can keep the spread. You can keep that $2.8 million, and that. So it is a trade-off. So you can get into a car wash and you can get into it quickly and you can start making money quickly. But if you're a developer and you're building these things, it can be 2 years till you see cash flow. But then you've got built-in equity. So if you're an investor and you're looking to build wealth over 5 years, can be a great way to do it. If you're an investor and you just say, well, I need additional income starting, tomorrow or 3 months from now, then that's a different, you need to go with some other kind of a system because
Mm-hmm.
there's a trade-off. You might get the cash flow quickly, but you won't have as much built-in equity. So, it depends on who that investor is and what they want.
Mm-hmm. Well, there are all different kinds of car washes, from the completely, totally self-serve and they have the nozzle and you spray it down, and to the very service-friendly car washes where there's automation, and not only automation, but they also have a team to really fine tune the finish on the cars. What kind do you invest in, or do you invest across that whole spectrum?
We are exclusive to Tommy's Express. And there's a number of reasons for that, but they were the ones we chose. And we'll be, by the end of this year, I believe we'll be their number one franchisee, the largest franchisee. And there's a number of reasons we went with Tommy's Car Wash, and I'll tell you a couple of them. It's, they hold the record for the most cars washed in one day. I think it was in a 10-hour period. We can wash between 200 and 300 cars per hour. So
Wow.
it's a high volume business. It's a low touch, high volume business. It's made for you can, we can wash 200 to 300 cars per hour with 3 people on site.
Mm,
So many of these car washes, and especially the ones that are, white glove, or they clean out interiors and, do some of that. I just saw one of those yesterday.
mhm,
There was probably 20 or 30 employees on site.
mhm,
It's a low volume business. And so really when it gets down to, okay, so now you got the business model. The business model is designed to get you off the road and back on the road in less than 3 minutes. And so, we put a large volume of customers through there. That also means that there's no lines. Very seldom is there any kind of lines there. You can just cruise right in, cruise right out.
mhm,
So people like that. And on the operations side, do you think that it caught the attention of some other business owners, private equity firms, institutions, when they're talking about, even a Chick-fil-A, a franchise, you know, you look at any Chick-fil-A, any busy Chick-fil-A, and you'll see what, 20, 30 people on site. So think about what happened in 2020 to 2022, and you think about, okay, so how did that compare to some of these other businesses where there were so many people? And so it really caught the attention of private equity and institutions, and we're really building this portfolio to really kind of take advantage of this, because we see them now clamoring over themselves, trying to get, trying to take a position in car wash, and it's hard.
mhm,
Number one, they don't do development. They almost never do development. Private equity money isn't patient. And in order for them to take a sizable position in the car wash space, a 9-figure check, they would have to buy 15, 20, 30 different operators, because there's a large percentage, 80 to 90% range is the last number I heard, of where, mom and pops own this space. There's around 61,000 car washes in the United States. And most of those, almost all of those, most of those are owned by mom and pop operators with 3 car washes or less.
mm,
So in order for an institution to take a position, they would have to buy out 15, 20, 30 different operators with a bunch of different kinds of equipment, a bunch of different hardware, softwares. I mean, it'd be a jumbled mess. So what we're doing is we're building a portfolio that we believe will be very, very attractive in a couple of years from now to an institution. And I've seen this happen before in the self-storage space. I got into the self-storage business back in 2017, when the self-storage space was much more fragmented than it is today. And, just last year, we saw acquisitions, consolidation, with B's behind them, 2.6 billion, 11.2 billion. We're starting to
mhm.
see this happen where, now these institutions are starting to merge or trade with each other. And so we believe, we're confident the same thing's going to happen in the car wash space,
Mhm.
and even more so. And the car wash space is a lot more fragmented than the self-storage space was. So I think we're in a really good position. We would love to build this business and keep it for 20 years. But when we see the multiples and that these institutions are paying on EBITDA for large, well-run portfolio of tunnel car washes, we'd be crazy to keep it. So who knows what will happen in 5 years? But we're expecting that we'll get bought in the next 5 years or so.
Well, fantastic. Just fabulous, fantastic information. We are talking with Dave Zook, who is experienced and has tremendous amounts of wisdom and business acumen. You can find Dave at therealassetinvestor.com. Dave, what are your last words of wisdom today?
So I think we touched on a little bit, but I'll just reiterate the importance of, once you know the asset class. I'm much less interested in the Excel spreadsheet than I used to be. I look at people.
Mm-hmm.
Find yourself an operating partner. Whether you're going into the multifamily apartment business or the office space or self-storage or car wash, whatever, focus on the operator. Make sure that you're dealing with good people. Number one, it'll be your chances of success over the long term is going to be a lot greater, and you're just going to have a lot more fun. So I would say in whatever business you're in, whatever area of the country you're in, whatever asset class you decide to get in, find, for me, it's all about operations. Find the right people and do business with them. I used to be a lot wider and less deep. Today, I'm a lot deeper and a less wide as far as the amount of people I do business with. So I would say find great people and do lots of business with them. Figure out how to do lots of business with them.
Well, thank you so much, Dave, for being with us. Lots of wisdom, lots of things to digest and think about. And I just love having that kind of guest. So thank you so much, Dave, for being with us. And enlightened investors, thank you for being with us. We love having you with us. Please take a moment to like, share, and subscribe. And if you would, please go to your favorite podcast app and leave us a rating and a review. Until next time, live abundantly in all areas of your life. We'll see you in the next episode.
Thanks for having me back, Alan.
You bet.
Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.